Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Bruno, glad to have you here.
Glad to be here, Paul.
Ramsey, good to see you as always.
See you as well.
Yeah. Oh, by the way, I like the vest for those who are watching. Little different look. It's good.
Yeah.
Hey, listen, we had some really interesting shows right during the pandemic, and boy, it seems like that's. Some ways it was yesterday. Some days it feels like it was 10 years ago. And we had a number of shows with people talking about what was required to start to sell digitally. So start to sell, oh my gosh, over Zoom or Teams. And obviously the world has changed again, but we thought it would be useful for a lot of our listeners to actually hear from somebody who's actually, I would say, showing very good signs of success of coming up with sort of the next model to reach customers, and that is Mr. Alex Khassa, CEO and founder of Clients Black Box, Inc. Alex, welcome to our show.
Thanks for having me.
Yeah, well, David Macchia, one of our frequent guests, said, you got to talk to Alex, see what he's doing, and so I mean, first and foremost, just maybe if you could, introduce yourself, tell people about your backstory. I found it fascinating. I know Ramsey and Bruno are going to have a lot of questions once they hear this.
Yeah, I'd be happy to. So my name is Alex Khassa. I'm the CEO and founder of Clients Black Box. We basically help financial advisors get more clients virtually using Facebook ads, doing it our way, which is very different than webinars or seminars any other way. How I got into this space is for about the last 9 or 10 years, I've been doing digital marketing. And up until 2020, I used to work with not only financial advisors, but a lot of different companies, e-commerce companies, coaching programs, online courses. I was basically a fractional CMO for hire. Whoever needs marketing, they can come to me, pay me a fee, and I'll do it for them. In 2020, because of COVID, what you talked about, a lot of people wanted to go virtual, and a lot of people needed to get appointments and leads and clients online. So we had a surge in demand for my kind of services. That year, we had about 15 new clients come work with us, 47 of which were not financial advisors. 3 were. The 3, I did the same campaign for all 3 of them, and every dollar they spent, they made $10 back in return on investment. I was not seeing that with the other 47. It was up and down. So when I looked at this space, I was like, hey, the way we're doing things, I don't see anybody else that's helping financial advisors get clients using this way. And I know it works really well because I've done it for other industries. So I was like, hey, let me just focus on this industry. It seems big enough. The finance industry is the biggest industry in the world. I think third biggest after oil and real estate. So there's a big opportunity there. And what we're doing works. So if I just focus on this for the next 3 to 5 years, pretty sure we can become one of the top firms helping financial advisors doing this because nobody else is doing it. So that's when I, learned about sequence of returns, about all things compliance, about, what are fixed index annuities, why a 60-40 split annuity stock portfolio beats a 60-40 split annuity, bond and stock portfolio based on Wade Fowles research. And really realize that this is a really good solution for most people that are risk averse and are about to retire, and that's going to help them get more retirement income and all that. So over the past 3.5, 4 years, we spent north of $3 million for our clients on ads, their money. And we found a way to get clients predictably through Facebook ads, without webinars, without chasing leads, without seminars, using kind of like our own way. So what people get when they work with us is we basically just copy and paste what's working for our clients right now, and they get to skip the 6 months and 6 figures of trial and error.
All right. And one small detail there, you did this all from primarily living in Morocco, correct?
Yeah, that's correct. And it was not easy, when you're telling somebody, hey, I'm a few thousand miles away, send me a few $1,000 to help you with marketing. Which means, we have to be better than somebody who is native in the US and shaking hands with advisors in real life. So that puts some positive pressure on us to get clients. In the beginning, we were saying, hey, give me a few $1,000 and a few $1,000 for ads and I'll help you with marketing. So we started off low. Then as we got more success and as we filled up our client roster, we just went higher and higher in terms of the minimum ad spend that we require and our fee to get this done, because we have more testimonials, more case studies, more success stories. So being out of the country was more like a forcing function for us to be much better than any competitors.
So how do you keep up with changes in the algorithm? Because obviously over time, the rules of engagement can change pretty dramatically. And, there are a lot of people that have sort of died on the hill, if you will, whether it's Facebook ads, Google ads, or whoever else, like spending a lot of money, having very high customer acquisition costs. So how do you keep abreast of those changes as they develop?
That's a great question. And as you say that, literally Facebook changed their algorithm a week ago, and we found that a bunch of our ads were turned off because they wanted us to change something about the way we do it. So it changes sometimes weekly, sometimes every few months. So you have to stay on top of it. I think the mistake that most people do that are kind of like in the space of what I'm doing, helping people with Facebook ads or YouTube ads or whatever it is they just want to scale. They want to help. They want to just work with a lot of advisors. And we are very particular about the kind of person we want to work with. We want to work with somebody who understands how this kind of marketing works versus if you're just paying for a lead. If you're paying for a lead, it's very passive. You don't have to do anything besides pay for the lead. If you're using our system, you have to record videos. You have to, communicate to us what's happening with the leads. So it's about picking the right partners. For us, they're not just clients, they're partners that understand how the platforms work as well. And second of all, I believe the best way to do it is to remain boutique. We only work with about 20 to 25 direct clients. We have other ways where we work with, independent advisors that are not direct, but direct clients, we only work with 20, 25, because I found that is that's the maximum amount of clients I can take on personally to be able to deliver the results that we are able to, instead of hiring a bunch of account managers that have a fraction of my experience that I have to train. That's the path that most agencies go to. And that can work if it's like low skilled labor. But if it's a high skilled thing, I found that choosing the right clients that get it, and are collaborative, and also not bringing on too many that were distracted, has been allowing us to reduce the amount of time that I'm spending in operations and dealing with fires, and spend more time into, creating different ad copies, figuring out what's happening with Facebook, keeping up with the algorithm. So it's more of a structure thing for us.
Well, tell me what collaborative means. What do I have to do to make this work?
What you have to do is, first of all, communicate. Is it working? Is it not working? Are you happy with the quality? So that's number one. But number two, you have to record videos. So for example, 2 years ago, we were able to run or have clients record videos once every 3 months, and that was good. That was enough. We were able to get appointments for a decent cost. Now we have to get them to record videos every month, like literally every month. So in a few hours from now, I have to jump on a call with a client and tell them, hey, the videos you recorded in April, they're no longer working and you have to record more. So because there's more competition, and because back in 2022, it was recession and most companies were not advertising anymore. So the CPMs, the cost for attention was cheaper. It was easier for us to make it work. It was a good time to scale up the business. In 2024, now we have the election, we have more competition in advertising. The economy is doing well, so people are spending more in advertising. We have to be more proactive about how often we record videos, and having clients or advisors that work with us understand that can help us a lot, because the creative we found, the videos we put up on Facebook are the number one variable to success when it comes to the way we do things. So that's what I mean by collaborative.
So I've got a question. I mean, if you think about it, like the substance of the message doesn't really change, right? It's, defend yourself against sequence of returns risk. It's, the value of lifetime income. It's more or less the same themes. So when you ask somebody to record a new video,
yeah,
what do you ask them to change? Because imagine the same guy sits down in the same room that he or she records in, right? Yep. And it won't seem a whole lot different. So how do you instruct them on how to differentiate the video so that it gets that incremental attention?
So when I first started this, I knew that advisors are not advertisers. Advisors are not marketers. They're salespeople. They're good at the service. So I never have my clients create their own copy, their own messaging. We do it all for them. For example, last month for one client, we created 80 new variations of ads, like literally 80 new variations of ads. And when I think about it, and everybody tells me the same thing, you're always talking, you're always going to end up talking about the same thing of asset preservation, more retirement income, blah, blah, blah. How do you differentiate that? Well, it's kind of like thinking about product versus feature versus benefit. The income rider is a feature. What's the benefit of that? The benefit allows you to tap into what about this is going to make somebody's life better. And then I try to make the message more emotional and less logical and product based. So thinking about, okay, well, if they have their retirement plan done right, they're never going to worry about running out of money. They're going to be able to maintain their lifestyle in retirement. Also thinking about what's trending right now. One of our most powerful ads right now, and I won't give it away, is a popular finance guru made a mistake advising people to withdraw 8% of their assets every year. And we just say, hey, we think that's wrong, and here's why. Sequence of returns. If you're getting 8% a year or 12% a year, as he says, well, you're not getting that every year, And if you take out income during a down year, you're compounding the losses, which makes it very hard for you to recover. So thinking about different ways to simplify the complex world of retirement planning and finance is my job. That's why I have a job.
So yeah, we know who that guy is. He has a great last name, but other than that, so that's interesting. So ultimately, the new message then was a crafted response to that gentleman's statement. And by the way, Paul, is there any reason we can't say his name?
No, that's all right. But what's interesting, Alex, is not so that much the target, but you're telling me I have to sit and make 80 videos with little variations on the script. Is that right?
Not little variations. Each video is very different.
Yeah.
And I create all the scripts for you. You just spend a couple hours talking to the camera, and I have my video.
A couple hours. Yeah, a couple hours, Ramsey.
Is it 80 distinct different read-throughs, or is it one read-through that you recut in 80 different ways?
So the way we do things is the hook or the beginning of the video is the most important part. So that's the main thing we changed. We changed the first 30 seconds to minutes. And then after that, it's pretty much canned. So the way we create videos is hook, story / explanation of the hook, and then call to action. The call to action is always the same, but the thing that I'm going to get your attention with and my explanation of that's what I change.
Okay. Give us a couple hooks.
Oh, I can see a lot. No. Yeah. I look, these little tiny variations can make an enormous
I just want
difference.
some examples, Paul. I want to You can share too. I mean, just what are a couple recent ones that, I mean, they're on Facebook, right? So they're in the public domain. So what yeah.
They're not necessarily in public domain. They're copyright protected. So that's intellectual property. But I can share with you one that's worked for us for
sure.
For about 2 years now. I think we spent north of $500,000 on this one hook. So it starts off like this. Congrats, you're a millionaire. You're about to retire. Now what? Wealth accumulation is one game, but wealth distribution is a whole other type of game that operates under different rules, requires a different financial skill set. Hi, my name is so-and-so. I'm a fiduciary retirement planning specialist. I've helped thousands of people retire. I made a short 10-minute video that explains blah, blah, blah. Click the button. That's an example.
And so you seem to put a lot of importance on sequence of return risk, which undoubtedly is at the top of my mind as well. What are some of the other risks? What are some of the other dynamics that do resonate well with ultimately with clients for selling?
Yeah, so we can talk about maximizing retirement income. We can talk about why this 60-40 portfolio, they usually say, hey, if the market's up, bonds are down. If bonds are down, market's up. But in 2020, both stocks and bonds were down. So it's not foolproof, the 60-40 portfolio. So we talk about there's a different way to get income out of your portfolio that can protect you against market downturns. We also talk about, market downturns. 2020 was a very bad year for most people. We talk about inflation risk. We talk about timing risk in David Machia's terms, longevity risk. We don't know how long we're going to live. You might live till 85 or 95. What if you run out of money before you run out of life? So those are different things we talk about. Sequence of returns we found works really well because if they're working with a Morgan Stanley or Bank of America advisor, they're not really talking to them about sequence of returns because they don't have a good solution for it, or they don't know. So we found that most people are uneducated about it, and very few people have heard of it or actually understand it. So if you can explain it in simple terms, people are like, oh, wow, I don't want to go through that. Well, how do I protect myself against that? We don't offer solutions in the video. We just say, hey, if you want solutions, we can talk. Book a call.
Mm-hmm.
Yeah. Book a call, answer a few questions, and we'll talk.
Yeah. Now, from a compliance standpoint, I think your strategy to put me out front, if Ramsey is a client, I'm a client, we're not using the same ads. We're using our own videos, correct? So we really are in control and generating our own leads. So we're not going to run the risk of, I would say, the risk of calling somebody who didn't actually opt in. It's got to be a lot lower at this point, right? With your strategy.
Yeah. So you never get their information until they book a meeting with you. It's not even a lead. They have to go to your Calendly account and put in their first name, last name, email, phone number, answer how much they have investable assets, answer what are their top concerns in retirement, answer a couple other questions, and then they book a meeting with you. So there's no compliance risk when it comes to that.
And so what are the conversions look like? So when people show up, so people have gone through this screening process. So there's the hook video and there's a longer video, and then they book an appointment. Like, what kind of conversions are your clients seeing on those?
Yeah. And before I answer that, this is why I talked about having the right partner or clients for us. And I'll explain why. So if, let's say 15 people book a meeting, we're going to see 60% of them show up. So about 10. And the conversion rate from somebody showing up to closing and transferring their assets is about 10%. So when you tell most advisors that, they're like, well, I'm getting 70, 80% to close in person, or 50%. They're getting a much higher close rate on seminar appointments, but that's in person. You got to spend 2 hours with them versus you could have done 2 or 3 calls at the same time. So that's why working with advisors who are primarily virtual or want to go to mostly virtual helps, because they have the expectation of, oh, if I speak to 10 people, I'm not necessarily going to close most of them. And that's okay, because the cost per acquisition is still fine for me. I'm paying $7,500 to get a client that's worth, anywhere from $30,000 to $50,000, depending on my comp, to me. So they understand that, and they like the aspect of, I can have a distributed team where I can work from anywhere. I can have people in Cincinnati, in California, and I don't have to rent an office. And then saving on commercial real estate, I can reinvest some of that money either in marketing or in my own take-home income, or in giving my clients more services. We have some clients or some advisors that, because they're virtual, they're able to afford to offer more services for free to their clients, like estate planning, tax filing, et cetera.
So you'd mentioned before we came in sort of like what the typical clients, what is the typical client profile? AUM, ticket size of annuity purchase. What does that typically come out on average?
On average is $500,000 annuity and 400,000 AUM.
Got it. So, all right, but okay, then what versus what investable, I guess, is my question then. What is the typical investable assets that they have?
Oh, okay. So most people that book, they definitely have more than 500,000 investable assets.
Yeah.
Most people are between 1 and 2 million. That's the average.
Yeah.
And the average case size that's written is that 900,000, $500,000 annuity, and 400,000 AUM.
Okay, so our average case size is around 155. Now, if we did median case, it'd be smaller. So you're really targeting a much higher net worth audience. Probably most advisors are reaching.
Yeah, definitely. I mean, we're talking to millionaires. Congrats, you're a millionaire. Have you saved more than $1 million, but you're not sure if it's enough to save for retirement? We're talking to people that have saved more than $1 million because we found that it's not more expensive for us to get a client that has $1 million than to get a client who has $250,000. It's practically the same cost. So why not go after the higher net worth ones, because it makes more sense dollar wise. We educate everybody. They can still go, they know about sequence of returns. They can still call their advisor and say, hey, how do I deal with this? For every person that books a meeting with one of our clients, 2,500 other people have been educated either through our 10-minute video or our 90-second ads. That's a lot of education that we're doing. We're educating about 2.5 million people a month right now through our videos. So whether they work with our clients or not, they get some value.
So 2,500 people watch the video for everyone that actually books an appointment.
Yeah, 2,500 people see the ad on Facebook.
Yeah.
For everyone that books a meeting.
Got it.
Yeah, no, this is really interesting. Now, okay, suppose I don't have that much money to advertise. I need to get to the point, Alex, where I can afford you. What are some basic rules in the middle of 2024 for generating, let me say, customers online? What should I be doing?
I would say if you have a budget of $1,000 to $3,000, you're probably better off doing this on your own. Just open a Facebook Ads Manager, watch a few tutorials on YouTube on how to do that. And what I would say is you want to run ads to a messenger conversation, like Facebook Messenger, because we're going to target people on Facebook. Most baby boomers and Gen X are on Facebook, not really LinkedIn or anywhere else. And you want to create a few image ads. So I'd say the photo could be whatever you want, but the copy is the most important part. Again, hook, story, offer. Hook, start with the pain points or something that's interesting. Don't steal our copy, but start with something that's interesting that will get their attention. Explain, and with the explanation, usually we try to give some education or try to make them think I never heard it that way before. I never thought about it that way before. Give them aha moment a little bit, and then the call to action is. Click the button below to send me a message. I'm happy to give you a custom retirement income plan for free. And that's the whole hook of send me a message and I'll see where you are, where you want to go, and I'll build a plan for you for free. And what I'll do from there is people will click the Messenger. You'll work the leads on Messenger, try to ask them, hey, try to build some rapport. Tell me where you are with your investable assets. If they're a fit for you, then you can basically book a call with them from there. I think that's the most cost-effective way for anybody to do this right now. It takes a lot of time, takes some effort. And I would say never, ever create one ad because, we have to create 50 to 100 different ads to find one that works well. I'd say start with 5. Create 5 different ads or different messages, and then see which one gets you the most replies or most messages, and then turn off the other 4. That's what optimization means. When it comes to ads, you just test a bunch of stuff and turn off the ones that don't work. Keep the one that works well for you, and then every day or so, create another 5 ads until you find one that gets you a really good cost per message, and that should help you get a bunch of people to talk to, and definitely some of them will become clients. And then you want to measure a few things, like what's your cost per message, what's your conversion rate from message to appointment, what's your conversion rate from appointment to close, what's the average case size, and you build basically a spreadsheet that you can use for your own to use this growth engine for yourself to get more clients in a pretty consistent way. So you don't have to rely on referrals, you don't have to go out and do seminars. You can start with basically $1,000 a month, and will take some time, but I think that's the most cost-effective way to get clients today.
All right. So, and we know a lot of people who've started businesses doing direct-to-consumer businesses, here in the U.S., life insurance annuities. There have been some pretty spectacular failures over the last year or two. What went wrong with a lot of the companies that tried to scale? Were they doing it too big of a scale? I mean, what if you were to write and say didn't work over here? What is it?
What do you mean, like marketing people for advisors?
Yeah, marketing. We saw a lot of companies, raising a lot of money from VCs over the last couple of years, selling life insurance online. Not some a few companies selling annuities, but they've all changed. They've all pivoted. They've changed their business models. Why are you successful and stayed successful and they weren't?
Well, I think most people want to scale before they hit that product market fit of I'm getting clients at a good cost. They're happy with what I'm doing. I'm not capturing more than the value that I'm creating. I'm creating a certain amount of value and capturing a percentage that is smaller than 100% of it. Most people just want to scale because the VCs told them, or because they want to have a certain lifestyle in their own personal life, and not necessarily because the business is at the right stage to scale. So I think waiting until you find product market fit, and then if product market fit is not something that is ambiguous. Like once you find it, it really hits you in the face. It's really obvious. So once you find it, that's the time when you want to go all in and expand. Building a great product does not require more people. It requires more focus on the product and the customers. I think that's where most people fail. Like, for example, if I'm just talking about the marketing for advisors industry, there's a whole bunch of people that offer different solutions. I believe, the way most of them do it is they just want to scale to as many advisors as possible without necessarily fixing the product, or without necessarily building a model that scales as the advisors come in. So after 2-3 years, they get a bunch of negative reviews online and they just shut down. So that's my perspective on that.
I mean, when I think about your model, pardon me, and I think that one of the things that may be a bit different than maybe what we think of when we think of some of the direct-to-consumer attempts is that you're basically right top of funnel, right, awareness. You're sort of effectively bringing them to the bottom of the funnel. Then there's a handoff to a dedicated I'll call it traditional or close to traditional advisor, right? Versus maybe some of the other attempts at this may have also tried to create the same kind of funnel, but then tried to bring somebody into an automated, sort of more self-serve type of system. So I think that to me is maybe one of the critical differences is that you're fundamentally, this is still going to be a people-oriented sale. It just means that the person that shows up, that the client that shows up has just been more heavily screened, right? So there's it's sort of time saving for the for the advisor. Is that a fair characterization of the differences?
Yeah, that is definitely fair. I would say, I'll name names. We're not like Assurance IQ that generates leads and has a bunch of people. We're not selling life insurance. We're selling more annuities, and that has to be sold through a person. I don't think people just go online and buy a $500,000 annuity just clicking buttons online. I don't think most people would want to do that. They still want to meet with a human being.
We've all tried.
I think they still want to meet with a human being and have almost the reassurance of, hey, this is a good idea for me, right? I should put half of my life savings into this annuity, right? Having another human being, I think, is a critical component for most people who are not. Most people are not really financially savvy. They don't know the difference between a 401k and Roth IRA, so they need somebody to walk them through that and make them feel good about it.
Yeah,
fair enough.
Well, listen, this has been fascinating. I don't know. We're kind of at the top of the hour. Bruno, any thoughts or questions here? I think your book has a lot of hooks in it, Bruno, that I think Alex could steal or
there's definitely some obviously, but no, thanks, Alex. And you mentioned some of our friends here, Dave Macchia and Wade Pfau. Anybody else on which you take a lot of expertise, a lot of inspiration in terms of getting content for this space?
Jason Smith from C2P has a really good book called The Bucket Plan. That book has a lot of gold inside of it.
Excellent. Hey, Ramsey?
Sure. Just thanks for sharing with us your journey, and in particular, it's one of the things that sort of I've seen over the last few years and sort of trying to decode how best to do this. One is you can't get away from the numbers game. And so you've highlighted that, right? So 2,500 views versus one appointment, right? And then sort of moving it down the funnel to 15 signups, 10 conversations, one close. So from 2,500 down to one. And, so that's the first thing, is that we all need to be reminded of that, of what those conversion ratios actually look like. And the other piece is this agility with crafting and recrafting the message such that it's relevant to the algorithm, and it's also relevant to the consumers that will actually see it. And that's a particular skill. One of the things that I've seen in my journey as I've talked to various marketers is there are people that are maybe pretty good at marketing, but they don't really understand our industry. So, having that edge and really understanding like the industry and connecting it with, again, all those marketing principles, I think is, I think that explains you're having sort of focus on this niche, explains why you've been able to do what you've been doing successfully. So congratulations on that.
Yeah.
Thank you so much. Appreciate it.
Listen, Alex, thank you so much for your time. And I'd be remiss if I didn't ask you to tell people how to find you, how to get in touch.
Clients with an S, blackbox.com. You can find most stuff there. I have a YouTube channel, Alex Khassa, LinkedIn, Alex Khassa.
All right. Excellent. Well, Alex, thanks for joining us. Thanks to our listeners. If you're listening, share this episode with people who may benefit from it, and obviously give us some feedback. We love it when we get it. And definitely join us again next week for another great episode of That Annuity Show. Thanks.